So joining me now is Margaret Vitrano. She is portfolio manager at ClearBridge Investments. Great to have you here on set. Welcome.
Thank you.
So what is your take sort of on the broader market right now and the role that tech has been playing and whether it can continue?
Yeah, well, I mean, tech and the AI theme is a big one. We're going to be talking about it for the next 10 years. That's an enormous theme. But what we've been spending a lot of time thinking about is what else is going to happen as the market broadens out. Right? I mean, right now, you absolutely see the impact of tariffs. You see the economy slowing. We're going through a little bit of a soft patch. We think it's a little bit of darkness before dawn because 2026 looks pretty good to us in an industrial capacity. I mean, we see early cycle companies starting to see green shoots. Can't take it to the bank yet, but we're starting to see. Eaton this morning talked about improvements in their machinery business. That's good. Rockwell Automation starting to see some green shoots. The reconciliation bill is going to be important for this to continue. We think it's about 50 basis points accretive to GDP growth next year. And that, I think, is the fuel that's going to help the economy broaden out, that's going to help some of those investments in our country, that's going to help some of this industrial economy, early cycle movers work. Do
you think investors are overlooking the impact that bill is going to have in terms of the industrial space, material space, manufacturing space?
Yeah, because the reported results aren't that good. I mean, with the exception of an Eaton, which is clearly benefiting from the AI trade and data center build out, you're not seeing terrific results in the auto sector. ISM is still negative. I mean, you're still seeing weakness broadly in industrials. Also, restaurants, other early cycle kinds of companies are still talking about a value-oriented consumer who isn't spending. So I think people are looking a little shorter term into what's a soft patch right now, but perhaps not really seeing how accretive the stimulus is going to be for next year.
Yeah.
That's our thought.
And to your point, Yum Brands this morning, which I think is trading lower. What's interesting to me is this convergence we're starting to see between AI, between technology, and the industrial space.
Yeah.
It's something that came up with Palantir's earnings last night after the bell, and Alex Karp, the CEO, talked to me quite a bit about it, and his focus right now on the blue-collar worker and this idea of AI-enabled factories and reindustrialization, et cetera. But it's also something that came up in my conversation today with Honeywell's CEO, Vimal Kapoor, and I asked him on the heels of those earnings whether industrial AI, the promise of it, is finally being realized. Take a listen.
One thing I hear now, which I've never heard, is customers are short of people. And it sounds, they don't have skilled people to run their operations. And they are looking for a substitute that what to do differently because you can't have more people because they don't simply exist, the kind of skills we are looking for. So I really see that industrial AI is going to enable our customers to run their operations better and fill the skill gap what exists. And we are basically in year zero of that.
So what was interesting to me about this conversation is Kapoor is not just stressing increased productivity. He's stressing increased growth from the promise of industrial AI. We talk about the so-called picks and shovels, the NVIDIAs of the world, and even the application layer with Palantir, but do we need to be focusing more now on some of these other physical manifestations?
Absolutely. I mean, if you think about it bigger picture, it's great for companies to be reshoring and investing in factories in the United States, but they have to be competitive globally, right? And it's hard to make them competitive globally unless you have automation. So that automation and that investment in factories and rethinking what a factory floor is supposed to look like and what it is going to look like is part of, I think, what we're going to see. I mean, I really think that the way we think about reshoring is different than the old way we think about bringing back labor in labor-heavy kinds of factories. And that's absolutely what we're hearing companies start to talk about. AI and the returns that we're going to get on that, the productivity returns, they're very, very broad. We're just scratching the surface of what we're going to see and the amount of improvement that we're going to see in productivity everywhere. It's not just industrials. Of course, we're hearing people talk about developers and early stage developers being automated, but that's absolutely going to get into car factories and all sorts of traditional industrial investment.
So whether it's that theme or just others that we've touched on here in this conversation, looking across the broader market, what do you invest in right now? What are your picks?
Well, look, we're looking at early cycle. We're looking at early cycle, and that means industrials. So for growth managers, this sounds very strange, but we're overweight industrials. We think that those companies, they have had a multi-year slow patch. And I think if we're right that we have a better economy in 2026, the industrial economy, we are going to see a broadening out. And that's a place that's really interesting. We're also been looking in consumer discretionary, because another early cycle, right? That's restaurants. If we're right that the economy improves next year, restaurant sales are going to get better as well. So those those are some places where we're looking. Of course, we own a lot of tech. We are a growth manager, but you know, a lot of those companies are very well loved and very well understood, as you see with Eaton today, and the reaction with very good numbers, because a lot of people are crowded in that, trying to find another way to play AI that's not a Magnificent Seven name.
Interesting. So, in light of all of this, and you just gave me some top picks here. What are you watching? What do you think is the next big catalyst for the market more broadly?
Well, I mean, we do think that the back half of 2025 could be rough. We think that people may not be really understanding the impact of tariffs. And so that's the opportunity. That's the weakness, where you take advantage of that weakness. But, you know, what you've seen thus far is that you haven't really seen an enormous impact of tariffs. You've seen S&P companies that have reported margins have been flat. And what does that tell you? That tells you that a lot of companies aren't really sure if tariffs are going to stick. And so they're saying, we'll just eat it for now, and then we'll see. Well, the longer they stick, the more companies are going to say, we're going to pass along these higher prices. And that is, I think, going to lead to more challenges in the back half of the year. But that is the darkest before dawn. That's where you kind of take advantage of what you think is going to be better in 2026.
Okay. Margaret Vitrano, thank you for joining me.